Stunning election results, which we're going to get into. But first, let me tell you a little bit about India. India is home to nearly $850,000 millionaires. And the number of ultra-high net worth individuals in the country are expected to jump 50% by the year 2028. Big numbers. And of course, that's because the Indian economy is booming and pro-business policies are helping to create these pockets of wealth as well as widening inequality. Of course, you've got Prime Minister Narendra Modi and his ruling Bharatiya Janata Party. They, of course, have been helping to mint Indian billionaires at such a brisk pace. And, of course, we're also seeing so many Indians being propelled into the ranks of the ultra-wealthy. So fantastic conversation setter with these election results. We have to get into it. I was actually in the recording studio until after midnight to record this morning's podcast, which you can now download. But obviously, no one expected these results. I mean, what we're seeing is essentially Modi and the BJP party have lost its majority, and they're now having to reach out to allies, essentially, to really form a government. What do you think that is going to do to investors? How should investors receive this news?
Well, I think they already had picked their allies pre-election. So while results, of course, are quite different from what was expected and, markets reacted in a knee-jerk way, the NDA as a coalition already has a majority beyond what is expected. BJP as a single party does not have that majority. So I think from that perspective, of course, a fair bit of difference. But if you see there would be immediate short-term volatility, etc., next few days till the government is formed, it's widely expected Narendra Modi will form the government as the next Prime Minister with the NDA alliance. And we should not see too much of a fundamental change in the reforms or the progress that India has been seeing for the last, decade or beyond. In this century.
To paraphrase Ruchir Sharma, India has an amazing habit of always disappointing both the optimists as well as the pessimists. I'm not that shocked or surprised by what we've seen in terms of the election result. Of course, as Vikram said, it is something that is against what everyone's been talking about. But historically, India has always had a coalition government, right? In fact, it's only over the last 10 years that you've seen a large majority one-time government actually being there as a single-party government. And despite that, you've seen the Indian economy essentially double every 4 to 4.5 years, right? Yeah.
And in fact, the coalition governments have actually worked. They're pretty effective in terms of getting stuff done.
Yes, exactly. And I think therefore, whatever that you've seen over the last few days, of course, both the euphoria as well as the immediate turn back is, of course, reflective of what people think, a little bit of disappointment, etc. But I think to say 2 or 3 things about India, right? You've seen the macro change in India over the course of the last many years. You've seen the kind of reforms that have happened, both from what we call the JAM Trinity, which is looking at the way the digital populace has changed, look at the kind of work that has happened on infrastructure, look at the kind of work that is happening across capex, etc. And I think just to take on from what Vikram is saying, you will see a little bit maybe on the corners in terms of maybe a little bit of populism. But I think generally the path of fiscal prudence, generally the path of continuing to invest in the economy, and generally the path that you will continue to see growth within India, touchwood so far seems unchanged unless you see a really force majeure event, which I don't think is in any of our minds right now.
Well, it's great to get that assessment from you guys. Now, we saw foreign investors, yesterday with the stock market drop, obviously that was just immediate reaction. It dropped to the lowest in 4 years. But generally, foreign investors have poured in nearly $21 billion into Indian equities last year. They pulled back ahead of the elections because of the uncertainty there. What do we expect, you think, now post-election? What do we expect to see with foreign investment?
So, it's interesting. We use this word called foreign investment, but it's actually a bunch of about 500 to 600 different managers, be it either hedge fund managers, long-term holders, etc., who will all think differently. But I do think that there are 2 or 3 things. See, the first one is, of course, the fact that has there been a little bit of dent to the story of saying that there is going to be policy stability, there is going to be continued governance, there is, and this story is only going to go higher and higher and higher. Yes, to some extent, that's changed on the margins. But I think clearly the long-term story hasn't changed at all, actually. Actually, I would say, just paraphrasing from what you're saying, that in times of coalition economics, you've actually seen a lot of decisions being taken that are harder. I think you will continue to see corporate earnings growth happen. You will continue to see capex investment happen. You will continue to see, I think one of the good things that will happen now is in terms of trying to help the domestic consumption numbers increase in terms of really focusing on the rural poor as well as on the poor below. And I think on the back of that, my belief is that you will see foreign investments come back, both of course on the fact that you will see more money come into fixed income, because actually a lot of that was waiting on the sidelines for the inclusion that's going to happen. Our fiscal prudence is better because RBI has given a significant amount of money, and therefore we have the liberty to be able to be a little populist whilst at the same time ensuring to have fiscal prudence. And I think all of that is going to be looked at by foreign investors positively. So my belief is that India, which was maybe a little overvalued, you've seen a much needed correction that has happened. And I think a lot of the money that's sitting, you will actually look at seeing come in over the course of the next few months.
Vikram?
I think, global capital is very under invested into India. So if you see our, India's 3.5% global GDP, but if we go into the allocation that comes India's way, that is far, far less. So the opportunity is humongous. And I think corrections like this or events like these lead to sort of convey more conviction about entering. So conversely, locally, the industry has also been gaining for a lot of wealth coming in. So we have something called a systematic investment plan into the mutual funds, which is now seeing about $2.5 billion come in month on month. And this is very long-term sticky money. In mutual fund industry, we have only about 15% of GDP into mutual funds. Compare this with some of the more developed economies, it's as high as 70%. So you see the amount of room there is for more flow to come in, domestic as well. So I think from both sides, offshore as well as onshore, things continue to look compelling. And opportunities like this prove to be generally good entry points.
Oh, that's good news, certainly. Now, we've seen big changes in household wealth in India. I know we've got a chart that will show that it's the fastest growing in Asia Pacific. Now, Vikram, how is that changing the approach for wealth management market? And, in terms of how do you reach out to those individuals who are wealthy or newly wealthy in markets outside of Mumbai and Delhi, outside of the top tier cities?
So I think that's something we as a firm have done very well in terms of capturing new wealth creation that is happening in India. In terms of liquidity events, there are literally 3 a day. Less than the previous year, but still 3 events a day. And I think, trying to reach that money to have that managed professionally, I think is key to our business. I think while traditionally everybody's looked only at the major cities, there is in India much beyond that. So for example, if we see again in the mutual fund industry, the B30, that is beyond 30 cities, beyond the top 30 cities, contribution to the whole number is about 22-23%. This was as low as 14%, I think 5-6 years ago. So we are seeing a lot of money coming in from the so-called smaller towns. So there is a lot of wealth there. It's always been there. It's always been known that it's been there, but I think now it's coming into the capital markets much more than it was in the past.
Finding a way to tap into that.
Yes, I think clearly, India historically was always a nation of savers. I think the interesting thing that has happened over the course of the last few years is that it's become a nation of investors. And you saw this trend happen across 2 or 3 things. The first one, of course, being what Vikram spoke about, which was the systematic investment plans and how investing has become part of the DNA of everyone, actually, and it's great. I think the second thing that you've seen is that there's a rapid financialization of assets that has happened on the ultra-high net worth side as well. So historically, stuff like real estate, stuff like physical property, real assets, which continue to be important, but were always large. You've seen that shift happen. You've seen that equities culture. You've seen money come into fixed income, and you've also seen stuff like private markets, private assets, etc., pick up. And I may be jumping to a later question, but I think coming back, therefore, what you're actually tending to see is that it's the fastest growing domestic wealth market in the world. You're minting millionaires and billionaires every day, and it's not only new money and liquidity events, but it's also old economy, right? So, And therefore, the demand for wealth management services and the demand for what we do globally, right? When you look at asset allocation, you look at various types of asset classes, you look at, all of that is now coming to fore in India. So therefore, it's a very exciting place to be as a wealth manager today. And, clients are becoming more sophisticated. They're asking for more. And I think you're going to see that continue to happen secularly over the next few years.
Mm. And what about alternative investment strategies, Vikram? How important is that for Indian families?
I think, again, we are massively underpenetrated at 3-5%, and this should ideally be a much higher double-digit number. And a lot of wealth creation has happened in this space, which is leading to the liquidity events, as I mentioned earlier. So we are very large in the alternative asset management business. In fact, we've launched our first secondaries fund. It's the first in India and actually very, very well received. So increasingly, Indians have always been astute investors. It's not that they haven't been. It's just that there have been pockets and they've been trying to do it themselves. So I think a formalization of choosing a professional wealth manager or an asset manager to manage the money for you is growing. And within that, I think alternatives is very, very compelling. And all the way from angel investing to pre-IPO, we've seen that space grow massively. AIFs within the mutual fund industry, alternative investment funds as we call it, I think that has seen a 25 to 30% increase in the last few years. So I think leading with alternatives, and people are very, very open to investing into alternatives.
I think it's a very interesting trend. You've seen that whole cycle happen over the last few years. So till about 3 or 4 years ago, we were maybe 3 or 4%. You saw the venture capital cycle start in India on the back of all the unicorns getting created and especially post-COVID. And I like to say that what COVID did to India was that it accelerated the growth of financial savings and it accelerated the growth of the alternate asset class. And over the course of 2 to 3 years, you saw the rapid expansion of what would have typically taken 10 years. And it not only happened in venture cap, but it's happened across the piece. So venture capital, private equity, late-stage growth investing, secondaries, private credit, which has become a very large opportunity, right? And actually over there, so you're seeing entrepreneurial managers come up. You're seeing managers becoming larger and larger. Just to quote an example, and without taking the name, when I talked to some Indian asset managers. Historically, most of the money they used to raise used to be internationally for private credit or structured credit or distressed assets, etc. And today they're saying that about 50% of the money that they're raising for a new fund is coming from domestic flows of individuals. Now that's where players like us play a role, who've been there for the last 16 years and who've got a very strong piece built across not only being able to identify interesting managers, but also be able to support clients through this journey of being able to select them and then work with them across the other needs that they have, right? Because clients are becoming very sophisticated. They're doing single assets. They're getting into funds, right? They want to be able to take strategic opportunities in companies. So it's as exciting as what I was hearing Bonnie talk about earlier or anywhere else, right? That market's fully exploded.
And they're also looking, I imagine, for offshore opportunities as well, cross-border opportunities, right?
Yes, in a big way, actually. I think historically everybody talks about the fact that India is a closed capital account country and therefore you're only allowed to send a certain amount of money every year, which we call LRS, which is the liberalized remittance scheme, and therefore you typically can send up to $250,000. Now that number's of course gone up dramatically. But I think generally, and with specific reference to ultra HNIs, they're becoming more globally mobile, both with regard to their businesses as well as with regard to their own personal needs. They want to look at their portfolios and they want to have offshore exposure in exactly the same way. Not like the times of old when people wanted to send money out for the sake of sending money out, but just the fact that they want to have an international portfolio like anyone else, right? And therefore, which is where players like us, etc., come in, where you have that connectivity across markets and where you can provide a full platform. Because the Indians are spoiled for choice and for service. Typically for most Asian clients and for Indian clients, right, the service that they receive from wealth managers, be it in this room or otherwise, is normally a level higher. And they expect that same service when they go out. Yeah. And which is where they look for full platforms like us who can actually then connect us across the ecosystems.
Yeah. Vikram, I wanted to ask you, I mean, we are in India seeing, in many ways, the first generation of wealth emerge for many Indian families there. How important is the themes of succession and wealth transfer?
I think as important as anywhere else, but obviously, as you rightly said, there's a lot of wealth still being created in first generational wealth. However, working with these clients earlier on helps in terms of, we've seen in the past, maybe a decade ago, very well known sort of families where the successors literally fought for the pie subsequently because it wasn't well sort of structured or planned. Increasingly now, I think whether it is the spouse who's succeeding or the children, I think these conversations are happening. All of us actually are full-fledged setups where we wealth advisory, succession planning, estate planning is an integral part of our offering, and I think clients are very open and keen on continued conversations as their sort of family situations and sort of business interests evolve both locally and, like Nitin said, offshore as well.
And for most families, as you talk about succession, is it very much trying to keep it into the family? Obviously, these family conglomerates are very popular.
No, I think just taking on from what Vikram said, it's no longer a taboo word. It's no longer a piece about the fact that the patriarch doesn't want to give up control. It's much more thought through. It's much more well structured. Older conglomerates have gone through generations now of doing that, and they've learned their lessons. The newer guys, as Vikram was saying, online towards liquidity events ensure that they're able to do all of it. I think generally there's always been this piece about, of course, taxation and uniform civil code and various other things, but generally all of these are now being created with longer term thought processes in mind. Not only trust and succession planning, but also thinking through family councils, how do you avoid conflicts. All of that is now front and center. And I think that's extremely healthy actually. Because people are really thinking about this in a holistic manner, which wasn't necessarily the case till a few years ago. And interestingly, you've got the two players in the room who actually run full-fledged setups in this. And these are key areas of strength for us in terms of really being able to reach out to clients and provide them these services.
Now, of course, there is a huge wealth gap in India, right? It's great that there are so many billionaires and millionaires popping up, but the top 10% of the Indian population do control about 80% of the country's wealth there. How sustainable is this?
I think this is something where we need to see the benefit or growth in the economy percolating down, and therefore now again results in a manner speak to this direction, and there will be some I think it was already happening, but it just happened step by step. So I think there'll be a bit of acceleration there because we can't have such a wide gap, as you rightly point out, and the sort of benefit of prosperity and growth should percolate down all the way to the rural and deeper parts of India. So I think everybody realizes that steps have been taken first to fix the top, as then the benefit can percolate to the bottom. But it's a very fair point and needs to be addressed. But I'm confident it will be addressed and is being addressed, especially in this in the next government that will be formed.
Because I mean that's certainly something that I think has resonated in this election cycle, right? The inequality, right? I mean, how long can you really have that?
Well, talking about, and data can be seen anyway, but this 10%, 60% is actually common across a lot of countries, right? But I think the great thing about India is the plurality of its democracy and of this message coming out very clearly. I think irrespective of what happened in the elections, it was very clear that job creation was going to be a very important focus going forward. The fact that you were seeing, whilst you had seen premiumization of consumer brands and that increased, but you hadn't seen that same thing happen with mass market consumer brands, reflected the fact that there was a little bit of issue in terms of that post-COVID things hadn't picked up to that same level for that last mass, and I think there will be a lot of focus of this government in terms of trying to help that. And historically, that's always been the case, right? You look at a lot of the schemes that have happened. It's always been a mixture of fiscal prudence, welfare towards what you do, and then trying to create this job opportunity. And I think the whole growth of, outside of agriculture, the biggest consumer of jobs in India is construction. Right? I mean, that's a given, and that's especially for the rural economies, etc. Now, you need to increase this. You need to continue focusing on infrastructure. You need to continue focusing on capital formation, because that will then automatically lead to this getting elevated properly. So I think the blue-collar worker and being able to address this piece is going to be something that's going to be key to the government going forward.
And what about, since we're on elections, I mean, the next 100 days are obviously important, and I was talking to, on the podcast, I mean, one of our experts there was saying, well, actually, the next 100 hours is really important, right? What does Modi, assuming that he can get together this coalition government, what should he be focusing on in the next 100 days, especially as we look to bringing in more foreign investment?
I think, the interesting thing about India is that there's always an election around the corner, right? We've just finished with this mother fall elections, and now you'll have state elections, and then, so you go from one election to the other. Yeah. So I think we are reading a lot into it, it's my view. I do think that generally in the next 100 days, as is post any such piece, I think a big piece to look forward to, is the fact as to, what are the policies and what are the changes that could happen on the margin. I think the July budget is a very key event to watch. I think the fact that we've been able to, and therefore, I don't think capital formation, I think focus on privatization, I think continuing to invest in infrastructure, continuing to invest in what you're doing from digital, etc., will stay, irrespective of who it is. I think what has to be seen is how does populism and fiscal prudence get managed to some extent. I do also think that a lot of the larger reforms that would have typically happened will slow down a little. But that's actually the nature of India. Even a lot of stuff, despite the fact that you had 10 years of one-party governance, you haven't really pushed through. So in India, typically it happens step by step. But I think generally we're in the right direction. And I'm lesser worried about how the next 100 hours and 100 days looks. I think unless there's really a force majeure event which we haven't thought through, I think all of our view is the fact that you're in a unidirectional way currently.
Absolutely. I completely agree with Nitin. I think the macro speaks for itself. And, from being called the part of the Fragile Five a decade ago, we've come a long way. So a lot of time, investment, energy has happened in terms of, perception of India outside of India. So I think, and that is bearing fruit. But there's lots more to be done. And, just if you pick any number in India, it just speaks volumes about the potential of the country. So I think any astute investor will see that playing out. And I frankly, again, unless there's something we haven't thought of, capital will continue to come in. But India is very well supported domestically as well, a point I made earlier, which also is a much larger constituent than it was previously. So both sides, I think, play a big role.
Great points. I want to delve a little bit deeper, pick your brain a bit. What advice do you have for my kids and for those young people out there who are trying to build wealth?
Yeah, I think 2 or 3 things. One is start early. A huge proponent of starting early, and it's not easy to do that. Second is that I think our kids look at investing or financial products in a very different manner than we do. Right, I see it with my son who's 12 years old, and I think we live in different ages. And I do think a lot of the fads that are happening today, and time will prove, but I think you need to keep it a little simple. And that is one of my advice always, because they're looking at investing in various fads as well. And you're seeing that, by the way, happen in India as well, digital investing and various other aspects of it. I'm not in a shape to comment, but I think keep it simple today, and stay the course. Stay the course. I think these are the only 3 things that I can say.
Vikram?
Beyond what Nitin said, I think the power of compounding is very powerful. So stay invested. And very importantly, seek advice. Delegate.
Yes.
Very, very, very sage. What is the best investment you've ever made? Money or otherwise?
I think, Bonnie spoke about it earlier, but I made this investment quite late, and it was only about 2 years ago that I really made this investment on myself in terms of focusing on health. And I think that plays a very big role, and I would say that's one of my best investments so far.
You can't pay for that.
Yeah, you can't pay for that, and I think you typically tend to learn through various cycles because you feel invincible for the first 15, 20 years. But I think that's the single most important investment that I would say that I've made.
Great.
I think for me, it doesn't seem so, but I'm a very active sportsman. I play a lot of squash, and I think sport is something that I'm very passionate about, and it's taught me many things that have worked well for me in my career, in terms of teamwork, in terms of never giving up, in terms of losing and coming back, and taking a winning with a lot of humility. So I think sport for me has been my biggest personal investment.
That's great. Vikram, Nitin, thank you so much for your insights and time.
Thank you.